Cool, 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 people. If you would like to have your microphones muted, unless you want to ask me a question, that would be great because I'm going to put this on YouTube. I'm going to be trying to do a few live sessions as soon as I can. Is a motion. Like I said, once Neo, the indicator is out there, I'll be doing a lot more live sessions as well. I am trying to figure out how to do it on YouTube, where it's just through YouTube, but I'm trying to do it obviously where I'm not showing my webcam. I know you can do it because I've seen people have done it. So I'm just trying to go through some of those options. If anyone does have a video that does show that for YouTube without using another software, that would be great. If I do have to use another software, I think there's one called OBS or something like that, then you can even send me that video as well. I'll look into it. But yeah, just trying to give people a bit more analysis. I'm not necessarily a scalper, but obviously I know how to read the market the best way I do. So this is why I give out these type of analysis through the week. I give a lot of them out in my VIP group on my Sunday sessions, especially the trades I'm trying to take. Just a strategy I coined for myself called the Neo trading strategy, which is just basically catch and break and retest. And I use the daily, weekly, or monthly time frame in order to ascertain like where I'm going to be looking for an entry. I also do use a Fibonacci that can help me out to find levels of rejections in the market after the break and the retest as well. It does help me out a bit. So I'm just going to go into it. So right now, rather than me just even giving out just analysis of trading pairs, because like I said, I'll go over this with my VIP students in the evening today. I don't mind going over some of those pairs, but if anybody's got any pairs they want me to check for them, whilst we're actually here at the moment, that'd be great because obviously the market's moving. So if you've got any pairs you want me to actually check for you, just please let me know and I'll check over them. So I'll just be looking in the chat, or you can open your microphone and speak to me. I'm here for you, people. GU. Let's go check some GU. All right, cool. GBPUSD. Where are we here? So for me on GBPUSD, I have been looking for more shorts on GBPUSD recently because of this breakout here and the rejection. My original entry where I was going to be looking for a long-term swing trade was around this area here. Let me just switch off this fib, the chart's a bit more clearer. And yeah, this is what I was basically looking for. But what happened is I had a supply zone around up this level here and never actually came back down. So they did actually hit my target low where I did mark out from hopefully trying to get a trade here, but never managed to catch it. Now they are pulling back up. I am looking for shorts on the USD pairs at the moment. That's the X USD pairs, not the USDX. But if we look at what's happening today, let's just break down what's going on today. Let's go down to here. So even on the daily chart, we have actually, let's go back here. We have actually seen a bearish daily engulfing candle. The only thing that we have to be wary of right now is the wicks that it has left here above on the daily time frame. So it has left some wicks above here, and what these wicks are, they're liquidity grab areas. If you haven't seen my video on that, you can let me know and I will post it on the YouTube description of this video, or you can just ask me in Discord, or you can go into my on my last video. I actually put it there. So the last video I literally uploaded on Saturday. It's in the description, the link there, and it shows you what liquidity means and what liquidity grabs are. So if they do want to go higher, then they will be going for this liquidity, and that will be pretty much looking at the previous day's high. If you see them going above there, and then you start to see a rejection off of this area. So the previous day's high was here. Let's mark this out. I'm just going to get rid of this. It was there anyway. Here. So if you've got any other pairs as well, please let me know and I'll give you an analysis breakdown on it. So if you see them doing this on GU, one click. If you see them doing this, then you want a retest on this level here. And then of course, a nice quick scalp trade would be literally them going for the rest of this liquidity grab above this area here. So for someone like me, I would be looking for a sell further up from this. Let's just say now if I'm going to take my swing trade on GU. So I would be expecting this type of move to happen anyway for them to get to my, of course, as you can see, my supply area here for a possible sell trade. If it does break this area for me, this would break its peak formation high, which means it goes back into a weekly buy trend on GU. But if you are looking for a trade, you're looking for that. If it is going to sell, let's go back down here. So we can see here we have this liquidity down here, and we're going to go down to a lower time frame to see this. Remember, if you have got any pairs, please let me know so I can check over them for you. Let's just see what we're seeing here. Go down to 1 hour chart. So right now I can see from a 1 hour perspective that, yeah, this is the previous day's high. So if they do reject this area, then let's go back down to the let's go up to the 4 hours, sorry. Back to the daily. I just want to see here. Yeah, so basically if they do reject this area, then they've got this liquidity grab down here, then you could be looking for a sell. So you could just be waiting. If you're in a group, you could just be waiting for a break of structure alert, or if not, you just have to pay attention to what structure's actually showing you. I've got another course video as well that shows you break of structures as well. Right now we are seeing a break of structure. We've seen quite a strong break of structure to this area here, so it's showing us that they're going bullish on a 15-minute time frame. Let's see how it looks on a 30-minute. On a 30-minute, it's pretty much the same difference, but they never broke this area here just yet. You use a 30-minute time frame to go bullish. On a 1 hour, it hasn't broken this last bit of structure here. But on a 1 hour time frame, we can see they broke here, which was a breakout right on this candle, retest and a continuation. And they've even wicked off of this breakout area. So right now, it does look like they've got bullish momentum. And if we go down to a lower time frame, liquidity grabs as well. If you are in the buy, anybody, you can see it here. So personally, like I said, for me, I would be looking for a buy continuation from this level here, which would let you take a trade like this if I was looking to take a buy. So if you had a retest off of this area here, the last bit of structure I can see is around this area here. And then you've got a nice trade all the way up to this highs here, which is about a 1 to 3 trade, possibly. 1 to 2.5, 1 to 3 trade, depends on how you trade it with your stop loss. But again, that's if you see them go here. If not, then they could be going down for the liquidity grabs around this area around here. Well, basically this level here. So you could see them sell back down to here. But like I said, I would wait for them to get to the previous day's high and then look to see if you see a double top or a head and shoulders formation and then a sell. Anybody else got any other pairs they want me to check? Any other pairs they want me to check right now? Going to Discord. Let's do this. Right. Go. Hopefully that helped you out, Ross, if you're looking to take any trades on that. That's what I see for now. We have seen a bearish break right now, so we could be seeing a continuation pattern to this sell going down rather than price action actually going up. So if you are actually in the sell, that's cool. That's what I've seen. We also had a break of structure alert from this area here. So yeah, price action is pulling down right now. So we could be seeing it just continuing down to the lows right now. But like I said, the best thing to do when trading is a very, very good thing. And a guy called Stacey Burke on YouTube actually helped me to identify this. Like, I always give credit when it's due. Never trade in between these areas here, because this is where you're going to get whipsawed, which is between the previous day's high and low. You never want to trade in between that area. You really want to be looking for your trades above at the previous day's high, low, or yeah, at the previous day's high or at the previous day's low, or again, like what Ross was explaining in the beginning of the day, above or below. That at least that way you know which way they're going. But when you trade in between the previous day's high or low on any single day, you're in a whipsaw. So you want to be careful of that, people. GJ, no problem, mate. GJ. GJ. Go here. So I actually caught this breakout on GJ at the moment. Let's go here. So I'm waiting for a possible buy over here, but I'm a bit sketchy. This is why I've got GJ marked out with red. Everything that's marked out red here, I'm like, yeah, I'm not too sure what they're going to be doing. Everything that's light blue for me, I've got a better idea that they might be giving a trade set up for a swing trade. As for GJ, I wanted them to go towards this liquidity down here and grab this. They haven't grabbed it completely just yet, so they might do another impulsive sell back down to this area for that. But what I did manage to catch today in a scalp trade for GJ was this, and it's based on the hourly time frame, something I'm just testing out. So on the hourly time frame, what we actually saw here is we saw the market break structure right here. So we had a break of structure right here on the hourly time frame, and then coming into this morning, now I've seen the market holding this level for a it was a demand level around this level here. we saw that there was a rejection. So when we was coming into London session, let's just do this. Give me a second. FXN. This indicator here, this indicator is a good indicator to see the sessions. There we go. So pretty much so it's a bit weird because the clocks have changed. Usually I'm looking to see what's happening around 6 a.m. in the morning to 7, just in case you get this move. Obviously, we're not in London session, just well, we've started London session now, but at that time we wasn't. So I was waiting to see if they give the breakout before London or around London session. You've got to be careful because you can miss it. And literally I would have missed this move. So I managed to catch the breakout as soon as I've seen this candle here in the market. I'm just trying to see, where is it? No, it was here. Yeah, as soon as I've seen this candle here in the market, I've managed to catch that because we can see right over here that the market was breaking structure. So as soon as this candle closed, boom, I was in this because now we've had 1 test, 2 tests onto this demand level, and then we had this breakout. So then I managed to catch this scalp trade from here to here like that. And again, it was all based on the hourly time frame, the breakdown. So I literally came out of this trade here. I just tried to just double an account. So I came out of this trade around about, it was just below this level. So I came out around about here. So I caught about 45 to 50 pips off of this trade. That's all I needed. I'm trying to see how it is to catch those type of pips and come out. Right now, again, like I've said, for the GBPs, where are we? Are we at the previous day's high? Let's see where we are. Yeah, so it's already touched the previous day's high, and this is why we could be seeing the rejection right now. So we've seen the previous day's high. We've got a rejection right over here. Let's go back down to the 15-minute time frame. The last bit of 15-minute structure. Let's get rid of. Okay, we can leave that demand area there. See what it's doing. The last bit of 15-minute structure is here. So you want to pay attention to what they do. So if they do break this structure here, we could be seeing GJ pulling back down for a sell like this. And what I would say is that you probably want to go towards the Asian high, catch a pullback on the retest if they break this area on the 15-minute time frame, and then look for your continuation of your sell down. If you are going to say, if you're not already in this sell, which is a bit of an impulsive entry unless you're probably on the lower time frame, then you want to really be looking at the sell back down towards this demand level, and then see how it goes there, because it could ricochet off this back up again. So this is all I'd be doing. So if I was to get a trade entry for a sell and I was taking a short with what's happening in London session, you just want to see that. That's a bit of a small stop loss. I was looking at this structural level here. You don't want it too big anyway. The previous day's high is here. So if you've got something like this, and then back down there. So if anyone's got any other pairs, please let me know. And again, you've got like another 50 pip sell trade. If you were trying to get an aggressive entry into this sell, you've had a 5-minute break of structure over here, right over here in the market. So you've had a 5-minute break of structure here. And then you could have been in this trade right now here with your stop loss just above this high here or above this high, depending on how you want to take it with your risk. And again, if I was taking that entry, I'd only have been taking this to the Asian session high, because you could get a ricochet off this for the retest of a 15-minute break of structure. So that's how I would have been in that trade. So right now we've seen a 5-minute break of structure, and then we pull it back to the 15-minute chart. And if you're waiting for a bit more of a confirmation, you're waiting for your BOS over here on the 15-minute time frame. So let's just get rid of that. So you'll be looking at something like this for a sell trade for there. Again, you only want to go to here because we are seeing rejections coming up. But if it is going to do what I expect for Neo, then we will be seeing a longer sell, going back down, pushing price action all the way down. So they'll even go for this liquidity down here. And again, if we go to the higher time frame, I'm looking for price action to go to the 886 on the daily Fibonacci to give me some type of rejection back up. So if it's going to do anything, I'm looking for it to do a move like this back up. And then we've even see here on the daily time frame, we've got this. So you can see how I trade. I'm looking at the big picture when I trade my Neo trades like that. So I'd be looking for a swing trade back up to that liquidity grab, and then finally clearing all of the impulsive moves that is done down here in December. Hopefully that makes sense. So anybody else got any other pairs? Don't be shy, people. If you've got some pairs, let me know. I know it's quite early for the New York crew. Usually I've got a lot of people from New York and around that time. Let's see there. Cool. if we've got no one else, then I'll just go through my pairs anyway. Okay, so the ones I had marked out this week, there isn't a lot of pairs. It could be because we're coming to the end of the month. This month has been very volatile. So either you made a lot of money or you had some losing trades. So what are we looking at here? So AUD CAD, I'm looking at a pullback towards this area here, which is the 786 on the Fibonacci. And if price action gives me a move like this, then I will be looking for a sell back down on this to go towards this target low area here. Price action hasn't got down all the way here yet from a daily perspective. So we still have all of these gaps that could possibly be filled if they are looking for a sell trade. So we've got all of these areas here, and then we've got another one all the way down here. Again, that's if they want to continue price action down towards the downside. I'm not looking to hold it all the way down here unless it gives me a massive impulsive move, but for now, I just need to catch at least 1 to 2 times ADR, which is the amount of pips that any given pair does in a day. I think this pair does about 80 pips. So let's even see that. ADR, ADR tool. What I do here is I just change this to 21 over here, right over there. And then this pip does, this pair does about 75 pips on average a day. Let's just zoom in so we can see. Yeah, that's 75 pips. So me catching a trade from here, even if the ADR expands a little bit, let's just say my entry comes in here, I'd be looking for about 140 pips. So you can already see it's already taking you back down to this level here already. So this low is almost like 2.5 times ADR. What's that? 20. Yeah, it was 3 times ADR. Could be 210 pips if it goes all the way back down there. But I'd be looking for about 140 pips on this trade. So around about here, I'd be looking if my entry was up there. So AUD CAD, that is what I'm looking for. A sell trade based on this area. And as you can see, again, the 786 on the daily Fibonacci for a pullback and then a sell. We've got German 30, well, German 40, which is DAX, no, DE 40, which is German 30. I'm expecting a sell on this pair as well. If it goes up towards this liquidity area, again, you can see this is the 886 on the Fibonacci, which is a great area. So based on the smart money concept or ICT, whichever way you want to call it, the 50% line on the Fibonacci is the equilibrium level, and you want to be looking for buys below that level. You want to be looking for sells above that level, basically. People like to call it the golden zone as well, the 618 and the 382 and the 50. So what people will tend to do is that they will say, you know, this is kind of like the basic Fibonacci rules. This whole area here is what they call the golden zone. Let's put this is a gold. There you go. So this is the golden zone. So basically, you're not looking for trades in between this area. What you're actually looking for is when the trades give you something like this. So a sell from around these areas here and down and below this area for a buy. The whole reason is that this is known as like a consolidation zone. So it's gearing up to either go long or gearing up to go short. So you don't really want to take a trade from there. You want to take it before. Again, you can see price action can go into this level and then ricochet off this level back up. So if you are taking a trade, you have to be aware of that. But if you do see a trade and you're in it and it breaks this level here, this whole golden area, then you've got a good chance that price action can continue going down or continue going up. Just a bit of knowledge there for some of the traders that are not aware of that. So yeah, I'm seeing a liquidity grab up here. I'm expecting price action to go grab this liquidity on DAX, on the DAX, and then give me a sell trade, a nice sell trade, because we even have this liquidity down here. Again, this is an indices indices love to go long, so let's bear that in mind. But if they are going to start pulling back for a sell, we have a liquidity wick up here, and then we have a wick down here, and we even have a wick over here. And all of this is areas they could come back for. So let's see what happens. This is a liquidity grab, as you can see here. They left this wick, and look at what they did with this candle. Whoop. They went all the way up to grab this liquidity, and then they left some more liquidity here, meaning that's why they went there, there, and there, basically. So just to give people some hindsight. Euro USD, we managed to catch this beautiful sell on this pair. This was actually a great sell that we caught on Friday, well, on Thursday. For this, our entry on this pair was literally around here. So we call this. This was a neo indicator sell trade. So if you look at the 2 videos I did before, not the last one, the one before that, there's a whole Neo indicator playlist anyway. And every time I make the trades that we catch from there, win or lose, I'll put them in there basically, as long as it's a short enough video. And yeah, we managed to catch the breakout. My entry on this pair was on this candle here. It was a nice one because it even gave you a retest to that area. But then I think it gave us a break around this. Yeah, it was here. So the breakout was from there on the structure. And then people would have entered from here when I gave out this signal in my Telegram. And we managed to catch this massive trade just holding it. So these are the type of trades I take, for anybody wondering. I take these type of breakout reversals, and you can see here. So the ADR on this pair was 100, and it just went almost 200 pips. So it was almost 2 times ADR for a TP2 hitting trade. Very beautiful, very nice, very simple. Look at the setup as well, again, guys and girls, just to show you I am not lying. I do not lie. I'm just trying to make you money, man. I'm just trying to make you some money. Look, breakout, retest, 886, boom. So sometimes we get it from the 786, sometimes we get it from the 618. But the bigger the pullback, the better it is for us because we can get a great trade. We also caught this one here. And this one was just around the 618. We caught this one here. This was another one that came out even the next week for another sell. But this was the one that I caught. So I caught this one and I caught this one here. That's what I caught. Yeah, you miss them sometimes. That's what happened. Like I would have had a better week, 2 weeks if I caught EU, not last week, because that just went the week before that. I missed that one, and that was a good trade. I would have had a fantastic 2 weeks, not even bad, even after the string of losses I've had. So when it comes to SPX, yeah, we already managed to catch this sell here. So this was a perfect Neo setup sell as well. Literally just kissed our area and then managed to go back down for a sell. I think I did put NAS 100 in the group. I'm not too sure if I put SPX, but it was in the Sunday Zoom where I did mention this, the VIP Zoom. So this one here was a beautiful sell trade. Couldn't make this. I'm going to make a video on this anyway. This will be the next video, and it's still even selling now, isn't it? Oh, this is a beautiful sell. But yeah, this was a beautiful sell, as you can see from here. It was a bit weird though because they did this FMOC news release. So if you was looking at a structural break, you was looking at this area here, broke here, and then retested back up, and then sold back down. So you would have had to, you would have had probably a bigger stop loss. But I think what happened with Neo, was that bigger? I'd have to go back over it. When I do the Neo video, you'd be able to see where the entry was anyway. And even if so, you'd definitely be looking at 5-minute entries on indices. I wouldn't suggest always looking at 15-minute entries unless you get a very tight like break of structure area. A tight break of structure area would be like, imagine was looking for the sell and it looked like this. This is where you want to kind of be taking 15-minute entries. But if it obviously looks more like this, where the last structural low was all the way down here, basically, you'd want to go down to the 5-minute. And what I mean by that is boom. So you can use Neo for 5-minute entries as well, just so people know. And I will be making a video on that once it's released. Is that in there? There we go. Okay, yeah, cool. So yeah, so you had a 5-minute entry right over here rather than all the way up there. So when price action broke this one, then you had a little bit of a better one to push you back up here. If not, you could have still gone from this one here. So what I tend to do, which is a little trick as well when it comes to market structure breaks, is if the market structure break is so far away, as you can see, this is still even far away where the last structural lows are, then you can now go down to the 1-minute time frame and then start looking for it. So where are we? 27th. Give me a sec. So we'll pull all the way back here. This is the only time I would look at a 1-minute time frame. And it's the CAD JPY buy trade I gave out last week was based on this as well. So where are we? It's going to take forever to go there. I don't even know if I'll be able to go the way back. Let's go. Thanks. We'll get there. We'll get there eventually, people. Aha, there we go. So now this is when I would look at a 1-minute time frame, and I'm sure you can understand why I'm saying this. So remember, the 5-minute low was here, the 15-minute low was down here, but now when we can see that the 1-minute low is over here, yeah, this is good enough for me. Because why? Because the pips make sense. The pips is like a normal, how a good 15-minute entry would technically be. I'm not trying to get in with a tiny 2-pip stop loss. No, I can see that the 1 minute break of structure, where the structural low was the last one, is still a good amount of pips away. So it makes sense for me to be able to take an entry on that pair, even if I'm looking at the 1 minute, because in theory, my mind is saying that 1 minute is like a 5 minute or a 15-minute smaller entry for a strong market structure break. So that is the only time I'd be looking at a 1 minute time frame. I don't look at it to try and get a 2-pip stop loss. I'd be looking at it if the stop loss on the 15-minute time frame is too wide, then I'll go down to a 5 minute, and then I'll go down to a 1 minute. So hopefully that makes sense for anybody that is watching this video. And again, even if you're not here, I know it's kind of early for some people and it's not something I've done before, so we don't have a lot of people online. You can always join my Discord. You can always ask me questions, and I definitely suggest you hang around in the Discord, because I'll be dropping more videos like this going on in future to help people out in these markets. Let's go back over to the daily time frame. Let me even go over here, back here. I didn't actually explain what was going on. SPX. Oh, come on, let's go. Okay, so SPX, yes, I'm still looking at a possible sell trade from this area, but it has to do an impulsive buy, cover this liquidity, and give me a sell trade around that area. Let's clone this. Here. There we go. So we've got liquidity here. So I want them to come and grab this liquidity around here and not go no higher than this liquidity here. I need them to give me a sell around this area here, which will be in between the 618 and the 786 for a continuation of a sell back down, hopefully creating another lower high and then pulling back down. If it obviously breaks this high, it will, you know, it's breaking structure. But again, as long as I'd be looking for 2 times ADR, so 2 times ADR will probably be pulling back down towards this area down here. I don't think they'll continue to go very much bearish on this. You probably just catch a nice trade, probably to kill some of these liquidity wicks down there. So that's what I'd be looking at on SPX. Again, if you've got any pairs you want me to check, completely up to you. I'm just going through what I'm looking at. Again, I'm a day/swing trader, so I'm not looking to try and take a trade setup every single second most times. This is why I'm trying to figure out a 1 hour strategy as well for myself that works. And I'll be doing, if you know I can find a lot of consistency in it, of course I'll be breaking down those 1 hour strategy ideas over time. Yeah, so the DAX, so not DAX, Dow Jones, we're looking for another one here. We can clearly see there's a supply level here. Let's just change this. Reverse this fib. No, this fib is pretty much, yeah, this fib is on the low. So no, this is pretty much what I would call a bit extinguished. So I'm not even looking at this pair no more. And let's just do this. Why I would call this extinguished is it's already done a massive move all the way to the lows. You can see it's on the low of the Fibonacci. So I'm not really interested in this anymore. This could start buying up and start breaking structure to the bullish side. So we can even already see that there was a break of structure over here. This is a previous weekly break of structure. I'm just going to get rid of that now, so it's not in the way. So on a daily time frame, we can already see that they've broken structure here. Right now, we're seeing a pullback to this area, which is the 886. So you see how I tell you about the 886 and the 786. This is just in reverse for the buy. So imagine you've watched it break out. Boom, you've watched it come back to this 786, 886 area. Okay, great. Now we've got a demand area in between here and here. So this is what I usually tell people. There's a demand area in between here and here. And if you want to make it any smaller, you can just make it like this. So what you could have done is, this is the impulsive candle here. You can just say from that bit there, the body of that candle down to here. Here's where the demand area is, right here. And you can see how price action's behaving. Because this is the breakout candle, we know that there was some type of order that was placed here, a massive order for a buy to break structure. So let's go down to a 4 hour time frame. And on the 4 hour time frame, we're starting to see a bit more of an understanding what's going on here. But we wanted to make sure we were getting an earlier entry. So let's go down to the 1 hour time frame. Okay, so this was our first rejection here, but the last 1 hour structural high was up here, so we wouldn't have been getting in that trade. Let's go down to the 15-minute time frame. And right over here, what have we seen? Boom. So if you was getting in, remember I've drawn that demand area from a higher time frame, and that was there from before price action got to this level. We've seen this breakout, we've seen this pull back to this area, then we've seen the break here. So for all the scalping type traders, you had a nice trade from here, with simple market structure right there. You had this trade here, or you could have held this trade all the way up to here, all the way to this level here, right there, before you seen this breakout back down. Now, we was waiting for price action to go back to this demand area and another breakout. So we've seen it go back to this area now from this candle here. Now we're looking for market structure to break. Where is that break? Boom. We've seen a market structure break here. And even if you go down to a lower time frame, simple supply and demand, you see here, this breakout's happened. And from this breakout here, we know that this candle was the huge candle. So underneath this candle is where we're looking at where our demand is coming in from, right there, boom. And we can see here the same thing happens just on the lower time frame. Remember, this is the order candle. So this was where the order was placed. As soon as this order happened from this breakout, just to make it make sense for everybody, the structural breakout level was here. Boom, right there. Now you can see it's coming back here. It's doing the same thing I just shown you from the higher time frame on a lower time frame. And now we're looking for a continuation of a buy from this level. So where's our structural highs at this point? We see there's one here, there's another one here, and there's technically one here, probably on a 5-minute time frame. So you can pick which ones you're looking at. You could have entered on this break here, and then your stop loss below this demand level. If you didn't get in on that one there, then you could have waited for it to break this one here, which you did with this one, and your stop loss below these lows here, you could have just had it here. Or if you said that was too high for you, you want to see if it pulls back, you could have got in on this break of structure right over here with this candle here with your lows below there. Now, most people wouldn't have waited that long. They would have seen this breakout, they would have seen this retest, and then they probably would have got in on this candle here, in all fairness. So again, this is how you would have taken this trade. If we're just being realistic with how people trade and the psychology patterns, you could have had your stop loss here, or you could have had it below these lows here. Most people will put it there to be safe, and then there you go. So you've got a 1 to 1.5 trade up here, targeting these highs here, and then you had another one if you're targeting this high up here. Boom. Now you've got a you got a 2.5 trade that could have possibly happened. Now price action hasn't played all the way out there, but you have seen that there's a pullback to at least this area here, which is a 2R trade. There you go. That's a simple supply and demand technique. And remember what I told you, for me, it's exhausted now and it's reversed. So I've seen a daily break of structure. I've seen a pullback to a demand. You could have gone to a lower time frame and then saw another demand that formed. I've literally broke it all down here, and you would have been able to catch an entry for a buy trade in there. Now, I don't trade like that for these type of setups all the time. I'm just trying to show you know, some type of variety of trading. So I'm not trying to tell people that, you know, my way is the only way to trade. You can trade whichever way you like. So if anyone's got any pairs you want me to check, please let me know. Like I said, I'm just going over my pairs, and I'm literally just breaking down my analysis. And this is what I do with my VIP Zoom students. I just break down what I'm looking at. Just like this. I do this every Sunday at 6 p.m. London time for a Zoom call. I said, let me start trying to see if I can do some London, New York sessions so people can catch some trades, man. Again, for silver, it's gone for this imbalance. But like I said, gold is buying. So whenever gold is buying, I tend to not try and do the opposite of silver, even though silver is telling me it could sell from this 886, 786 level. I tend to not do the opposite, so I kind of just leave it be. I feel like it's going for this liquidity up here, so I'm not trading silver at the moment. But my analysis is that if it is going to sell, we're looking at it going in towards this around this 886 area. And then we're looking at so it's cleared all of this imbalance now, which has been there for a while, so I can get rid of that. Yeah, so silver, we're kind of just looking at that. I'm waiting for it to just literally go into this area. There's a little bit of liquidity here on this candle. If it was to pull here, then you could look for a sell pattern back down. But again, gold is buying, so I'm not trying to do the opposite of what gold is doing with silver, so I'm just leaving it be. Let's go over to gold now anyway, because I know this is what everybody likes. Gold, gold. So gold is kind of clear and simple. Let's do this first. Let's bang over to the monthly time frame with gold first. So on the monthly time frame with gold, I called out the wicked sell from here last year, massive sell all the way down to here. I held a trade for a long period of time. Literally, I held it for like 3 or 4 months, the longest swing trade I've ever held in my life. Held it for long. It was a small lot size as well, like a 0.01 or 0.02, and it still made a lot of money. I held it for long, and I called out this trade all the way from the top up here. There's all proof of that in my Discord testimonials. You can see it from last year, March, I believe it was, and it was all the way down there. I was telling people that we had to look for this liquidity wick here, which was going to cover, which it did do, and then it brought back up, and then it went to go cover more, and then ricocheted back up. I called out this buy as well from down here as well in October, November. I called out this buy right from here. I literally gave everybody a sniper. I even actually gave this in the My Forex Funds group as well. This buy, which is still buying now as well, people. So I called out the sell and I called out the buy because obviously I do what I'm doing now, breaking down gold. So my idea of gold is we can obviously see here that there is a liquidity wick all the way up here. And there's one obviously over here, as you can see. So this is what I believe they're going for. A lot of people will be looking for the sell because they're seeing market structure weakening, but gold loves to chase wicks. It's why I was able to call out this massive sell all the way down here. And it's partly why I was able to call this buy because I saw these wicks here. So you can clearly already see it. Look how they're grabbing these wicks and they did it there. So, and look how they're still grabbing it. Look, boom, look there, and look, boom, and then look there. So this is what they do with gold. They'll give you a fake out sell. They did the same thing here. Here they did a fake out sell, and then I was trying to get in at first, and then they pulled it back up again to go grab what? The liquidity here. So I think they're still going to buy, even though they're drawing like sell patterns at the moment. They want to go and cover this wick. And if you're looking for buy trades now, we can go down to like the weekly time frame. And we can see obviously there was a weekly wick rejection off of this level here. So this is a liquidity. So even if we do get a sell, we're probably only going to get a small sell to cover this weekly liquidity over here on gold. So this is what we could get. This is why I'm even seeing that. So we could see that. But then I feel like if we go over to this time frame now on a daily time frame, you can see this is a strong support level. This used to be a peak formation where I was looking for continuations of sells, but gold never pulled back to my levels to give me a good sell. So right now I feel like this is a strong support level. Obviously, as you can see here, I called out this buy from this level last week as well, caught this one as well. It's my last video. And now I believe they could either pull back to this level and give you a trade. If they don't want to do that, then let's go back. Let's zoom out. Then then what we could be seeing is price action could hold this level here, which is the 886, and then could just buy up from there. So look out for your break of structure alerts on gold from that level there. There was even a reason. Let me go to the weekly time frame if I can see that. Yeah, there we go. So you can see right over here. So is this the so here. So we can see this was a strong rejection for a sell. One, twice. So there was, look, even here. 1, 2, 3, 4. So we had like 4 rejections off of this level here, which is 1964. And that's why I said that 1964 might hold and buy. If not, again, I've already shown you that there's a weekly wick here, so they could go sell, and then we could be looking for another buy off of this support level. But with this massive candle, they're not going to sell gold back down. There's like a 95% chance they're going to continue to buy gold. The candle they would have to do on a weekly time frame to cover this in order for it to break structure all the way back down is, you can imagine, it's going to be huge. You remember what gold did in the last week? It was crazy, the buys it was doing. So even from here to here. So yeah, they're probably not going to cover that candle. There's no wick at the bottom of this candle apart from this one. There's no wick at the top. So really and truly what this is right now is a this is an imbalance right over here, basically. So it's literally a demand zone imbalance, what FVG, whatever you want to call it. It's right there, a weekly one as well. So they're more than likely going to hold this and then buy all the way back up. And again, they're going for that liquidity wick up there. So that is gold. Yeah, so I've pretty much done an analysis on everything I'm going to trade this week. Like I said, there's not much else. If anyone's got anything they want me to trade, all of these purple pairs are pairs I'm waiting for them to get into position. So they need to break structure. And then I'm waiting for a break retest. They haven't broken structure yet. So these are all of the purple pairs. This is what I call the circle of pips. For anyone watching this YouTube video, call it the circle of pips. I just go around in a circle rotation through all the pairs, and any ones that are in a break retest around the 618, 786, 886, I'm looking for a re-entry. And that's where my break and retest areas are. These areas here in the fib, and then I'll look for a continuation or a trade. Any pairs, anyone? Any pairs? If you've got any pairs, let me know. If you've got any questions, let me know as well. If you've got any questions, I don't mind answering them. Let me know. Okay, if we've got no questions, I'll leave it there for now because I'm still going to do a Zoom with all of the students at 6 p.m. probably today. If not, I can always forward them this, but I have a Zoom at 6. Yeah, if anything, I'll see if I can come back for New York session if I'm seeing anything gearing up. if I do have any of my 1 hour setups for New York, I will put them there. Like I said, I'm trying to look at the 1 hour setups because I feel like that would be a bit better for people on YouTube, for my students and the people that want to trade Neo with me. Like I said, Neo can make you a lot of money as well in a week. Don't think Neo can't make you money. People think that day trading, swing trading can be slow, but trust me, there can be a lot of trades sometimes. So it just goes on like that. And that's what I trade most of the time. That's what keeps me consistently profitable or keeps my accounts in balance, whether it's break even or profitable. That's what technically happens. But I am trying to look for more of a scalp / day trade strategy. So you're in a trade for maximum of 1 day, or you're in it for, really, I'm looking for a strategy where you're kind of in the trade for like 2 hours and I'm gone, just so I can get on with life. You know how it goes. Yeah, so I'm just trying to see the questions that's asked there. No worries. EU, no worries, Greg. I'll check EU for you. EU, where is EU? It's up here, in it. So I don't think I'll be selling EU anymore because it's pushed.
This meeting is being recorded.
What is being recorded? Sabrina, what are you recording? You're not a police officer, Sabrina, are you? You're not a police officer. Yeah, so EU is probably going to sell back down. That's what I was going to say. Yeah, so I can't imagine them going all the way back up for this buy. I couldn't imagine them doing it straight away. Not impossible, you know, not at the end of the month. And for them to do this massive sell after, I've been waiting for this sell, this proper sell. So I don't think that's going to happen. Yeah, I can only see right now continuation. So let's just go to the previous day's high, which is far away. So if you want a safe sell, you want to be looking for the previous day's high and then a sell back down. Right now, it looks like they're probably just going to grab the liquidity over here, which was the ricochet off of last Friday's low. So they're probably just going to go and push price back down towards this level here. There's more liquidity here as well. So if they want to keep selling today, let's just say they want to do more impulsive moves, they could be going down to here. So here's where you could be, if you are in the sell here and here. So you've got 2 take profit levels, which is this daily wick here, which is that low. And then you've got another one right over here. That is what I'll be looking at. The way my strategy is based is that, you know, I've already got this trade now. The week's closed. I'm expecting for them to buy back up, more than likely grab this liquidity and then give you another sell here back down. But I will not be trading that because it's given 1, 2, 3 sells. I'll wait for a reset of a trend before I take another one. Yeah. So that's what you'll be looking at. Let's go down to a lower time frame and see what it's doing anyway. So on the 1 hour time frame, let's switch this on here. Yeah, it is. Yeah, boom, head and shoulders. Yeah, it looks like it wants to push down a bit more. That's what I think for now. I mean, we have got obviously a huge imbalance here. If it does want to buy, you've got a huge imbalance here. So they could be going up to clear this imbalance here, and then you could be seeing a pushback down on a 1 hour time frame. That's the 50 on the Fibonacci. So you could be seeing that for EU. Like I said, I wouldn't look to take a sell trade until it gets to the previous day's high, which this indicator helps you as well. It marks it out. This FXN Asian range indicator, the previous day's high is here. Boom. So I wouldn't be looking to take a trade until it goes towards this yellow line if I was looking for a sell trade. Because again, as I've said at the beginning of this Zoom, if you trade in between, it's not a problem. You can do it. Like I call the GJ trade like that. But if you trade in between here, this is where a lot of chop can happen between here and here. So don't get me wrong, you can scalp it, but you can get whipsawed basically trying to find a trade setup rather than just doing a simple wait for it to get here, which you can even set an alert on this. Look, set an alert on the Asian range, I believe. If not, you can just draw a horizontal line and set an alert there. You literally draw a horizontal line and then just go boom. Make sure you set the alert on a small time frame though. And you can just go to add alert and then go once per bar close. Make sure you click this. So once the 15-minute candle closes there, you'll get an alert. Boom. Or once it touches it and closes, you'll get an alert. And then you could be looking for sell setups on EU. Yeah, in between is scary. In between, because look what they're doing. You know, most people are selling. Oh, then they're buying. Trading in between the daily high and low, the previous day's high and low, is a very dangerous area, guys and girls. I'm going to keep telling you that. Not impossible to get trades, but it's a dangerous area because it's the chop zone. So when you're trading in between there, unless you're like proper 1 to 15-minute scalping, like your 15-minute chart analysis, 1 minute scalping, you know, you're just trying to get 15, 20 pips. That's cool. But if you're trying to look for, you know, a more solid 25 to 50 pip move, you want to be trading a rejection from the previous day's high and low, or again, like Ross has explained as well, you want to be trading from above the previous days or below the previous day's high and low, because then at least you know they've done what they've needed to do. The reason for that as well, so people can understand this, I'll show you. There's a very, very simple logic behind all of it. So let's just get rid of all of this. Is that no out of fib? Okay, let's get rid of that. And let's switch off this. All right. So the reason for this, people, probably what people are not understanding sometimes, is that every single wick is something important. And you've probably seen a guy on YouTube called Wicks Don't Lie. Yeah. Every single wick, let's do this one here, is a key level, is what people don't realize most of the time. So clone here, clone here. So this and this is a liquidity area right there every single time. So what price action tends to do, before it can move, it needs to go and grab liquidity and then go and do the move you're looking to see happen. Boom. This is what happens. This is why I wait for my impulsive moves before I take my Neo trades. So with Neo, there was liquidity here on this wick here. Can you see? And look at what they did. So I'm not saying you're going to win every single time when you trade the Neo strategy. You won't win every time when you trade any strategy. We're all aware of that. If we've been trading for, you know, more than 6 months, you're all aware of that. But, you know, there's key elements that you just got to pay attention to. Now, this is what they do here. So they went to go grab. Right now, there was basically, if you look at it, and this is what all of these, you know, ICT smart money people do. Yeah, they'll do this. Dollar, is dollar here, doiler. That's what's up there. There's dollar, there's money there. Let's move this to the middle. There. Nope. Okay, let's move this to the center. There we go. There. So this is the money. The money is hiding there. The millions and billions of dollars, people, is there. Yeah. So that's what that is basically. And all I'm doing with Neos, I'm just doing it from a bigger time frame perspective. A smart money ICT person will be doing this from a 1 minute to 15 minute to hour chart, maybe 4 hour, depending on how they trade their ICT smart money, whatever they're doing. That's what they'll do. So it's a liquidity grab. You get it. So that's what they do. They're running price up to go grab liquidity, take out people's stop losses, all of the stuff above, so that they can use that money to fulfill the order they need to do this. So for them to do this, basically for them to do this, so they had to grab the liquidity there. But at the same time, they've made so much money on this buy here. What they wanted to do is make sure they banked their money. That is where the Fibonacci comes into it. So they've managed to go to this point here. Now they've made X amount of money, but obviously what good is making money if you don't bank your money? When they offload the money, so they've banked money, this is when we see these orders in here. And that's how I try and catch these Neo setups, is after they've gone to go rush to the liquidity zone, then they're going to bank money, and that's when I catch the reversal. Again, sometimes I'm wrong, but then sometimes I'm right. And I just play off my probabilities like that. And again, what I'm showing you here happens on every time frame. So if you want to adjust it in a certain way, even using the fib, you can do it from a 1 minute, 5 minute, a 15 minute, whatever you want to do. It's completely up to you. You don't have to just use it on this. And an example of that is here. Where are we? GJ. I'm going to go check. Was there another pair that someone asked me to check? So I checked EU anyway, so I've done that. So just check the chat if there was anything else. GJ, EU. Yep, check that. Boom. So yeah, you know, so you can understand what the logic is behind that. Anyway, so I'm not CFJPY. Who wants this pair? This pair is yucky, boy. That pair is dodgy. I've probably had the most losses on that pair. That's why I don't trade EG, Euro New Zealand or Euro CHF. Those pairs, I've lost money in those pairs. So once you lose enough times in one pair, like, hey, I'm not trading this pair no more, bro. Yeah, so let's go down to the hour time frame now and see how this breakout was. Okay, so you can't really see on the hour time frame. Let's go down to the 15-minute time frame. Probably see a bit better here. Look at the move already. You see? Look, guys and girls, did I lie? Did I lie? This was all live in this Zoom. Look at what they did here. Look. So right now we didn't see, the only thing we didn't see is a retest to this area. But you can see right now, let's move this out of the way. Let's go to the 5-minute time frame, and then you can see. So you had your 5-minute break of structure here. You would have got in. Put this back on. Where did I tell you to take your move to? Right here. So it even went further than the Asian. You can see here, it even went further than the Asian low, but that's where you would have taken your trade from here. Breakout, stop loss above these levels. Look where it is as well. Look, no lying. Look at the previous day's high right here. Can't make this up. Previous day's high is right here. Boom. 5-minute break of structure. Your TP would have been the Asian high, but of course they went to the mid level of the Asian. So this is why I said you should use this indicator here. Let me take off the fib. So you can see, look, this indicator basically shows you the Asian high, mid, and low. So when you're seeing a rejection of the previous day's high, you've got a TP1 here, TP2 here, and a TP3 here. That's when they give you this type of trade setup. And this is literally how you can make money all the time. That's why I say I'm trying to use my 1 hour trading strategy, because if you can catch this all the time in London, by now you'll be done. I gave out this type of idea from this Zoom call. And even look, so look at the line. Look, I might like, look at what the line. Rejecting long. You see? So this is the 15-minute break of structure. If they're going to continue to go bearish, then what do we see here? Right there. So you would have been in right here if they are. And then now you would be looking to take your trade back down towards this demand level. Remember, I've showed you there's a demand there. So you would have been in here. Right now, you could be possible profits. It might still buy up, though, because this move went further than I anticipated. So you would be looking at this trade like this. I want people to understand. Yeah. Now, look, so this is where people mess up in Forex. I've told you the market can do that. Yeah. It doesn't mean it has to respect that. It didn't respect the Asian high. It smashed it. There's no way for me to know it's going to do that unless we was watching that pair. Yeah. Okay, cool. Now you would say to yourself, if I am going to take this trade, I need to lower my risk because it's already exerted, like it's used a certain amount of pips to go further than I expected. I wanted them to go no lower than the Asian low high and then retest this area and then give you this trade. Therefore, now you can say, okay, I would have a better risk I could probably take in this trade setup. But we've seen our 15-minute break of structure. Here's the retest. Boom. Let's see what they do. Let's just watch this quickly. Let's see. Let me see. So right now you would be in, this is a live trade. This is why I'm doing these sessions right now. You can see, just so people can understand this. So right now you'd be in 12 pips profit on this trade. See? So right now you'd be in 15 pips profit right there on this trade. I know everybody wants to scalp. That's why I said I'll start doing the London Zooms and doing these type of ideas so you can see. So you can see right now it's hitting the Asian high. So you're in a period where you would say to yourself, hey, this is hitting the Asian high. I'm in this trade from this area here. Boom. You probably got in from this candle here. What do I do now? Okay, now what I would do if I'm in this trade is go down to the 1-minute time frame and say, I'm probably going to put a break even here. Or at least I'm going to be monitoring this trade. So right now, you set your break even here. There you go. So right now you're in this trade right now and you've set yourself a break even. That's what you've done. And the reason why I'm saying that is because you can't take risks in this trade, because you can see it's probably filling back up, is because they've gone too far down. If they respected this area, I wouldn't have put a break even there right now. Or they just have to take the trade as a loss. So I want to see. But right now we're seeing a break and a retest. Let's see what happens. Yeah, no, I get you. I get you with that 1, 2, and 1, 2, 3. Let's see. I remember our TP is the Asian low, or at least this demand area here. The demand area was picked up by this. Again, same thing I explained before. It's just this. So right here. So you can even see it's from this candle here. You could use it. So it's from this candles here. If not, you could even do it like this. Boom. Right there. From this candle here, which was an impulsive breakout candle. Boom, boom, boom. Right there. Let's see what they do. You can do it like that. Again, it's still the Asian low though. Because why? This is the breakout candle. Breakout candle. This is demand below here because they put in an order. This is an easier way to find demand. I know some people are like, yeah, look for the demand when it's done. It's done 3 candles in one direction. Boy, I ain't going to be saying all of that. Wait for the breakout candle. That breakout candle is obviously an order block or a demand. However you want to draw it, it's that area there because that's where they've made sense in it. It shows you it's clear as day. And now let's see what's happening. See? Live-o like 5-0 people right there. So right now it's almost a 20 pip trade. So ideally, even a good, nice scalp trade setup would be just to this area here, which would be the mid area right there. And that would be a 42 pip trade. You don't need more than that. You could make a living off of a 42 pip trade. Really and truly, you can make a living off a 25 pip trade. Remember, you've only got an 11 pip stop loss. Right there. Let's see what they do with this. So right now it's showing like it's rejecting the Asian high. Let's go to the 5-minute time frame. See what we see. We want this candle here on the 5-minute to close below this level, which is the Asian high. I know this is the type of trading people like. They want to see this. They want to see scalp, John, scalp. Why you swing trade, John? Scalp. Show us how to make $100 a day, John. I know there's a cheeky person that probably took that trade as well. I know you. Admit it. It's Euro news. I was 9 o'clock and Euro news hit. That's why we're seeing this. I remember there's Euro news on the calendar. That's probably why we're seeing it. Yeah, no, that's really good. The 75% win rate is really good. You can go wonders with that. You don't even need a big RR. If you've got the higher your win rate, the lower your RR. The lower your win rate, the higher your RR needs to be. Yeah, that's not even bad. Let's see what they do. Right now we are sitting in how many? 20 pips profit right there. That's your daily bread done there, people. 20 pips. John gave you 20 pips today. Can we say, hey, yes. I gave you 20 pips. Yeah, you don't even need a big RR if you've got a 75% win rate. You could easily be making money from 1 to 2s, 1 to 3s with that win rate. Easily. So this is why I trade this. Somebody actually made a funny comment on my YouTube and they're like, oh, you people, you so-called YouTubers and your no lag indicators and this is what I said. And I was like, bro, why are you just messaging some negative stuff, bro? When I'm giving out good positive stuff, you're never messaging any, oh, thanks, John, for the positive information. You only came here to spread negativity. And my whole basis of that is that it is a no lag because we're trading price action. It's literally, this is what Neo's doing for you. The reason why I created Neo, because this is why I trade price action. The market breaks structure, then you look for your trade. So right now it looks like it's rejecting. So you see this 5-minute candle is not closing here so far. So yeah, this looks like it's going to be a break even. So it looks like it's going to be a 20 pip trade. And if you wanted to go any lower, to be sure, you can already see here that this one here, this 1-minute candle closed above. So boom, there. You would have taken, you could have either taken your profits off this trade, just took your 10 pips, or you could have caught your 20 pip trade. You didn't really need too much more. What is that? I need to go check that. So yeah, there you go. So this one looks like it's pulling back. And like I told you, rejection, because it's already broken this Asian high. That's why it's already technically done the move we needed right there. So this was the sell. So right now they could be going back up for the buy. So I told you it's a demand level that we're seeing. Yeah, most definitely. That's why I swing traded more of my live accounts as well. So yeah, it looks like it's going back to break even, and we all know why it's going to break even, because the Asian high is there, which is a strong support level. Right there, that was a 20 pip trade. That's all you still needed. You know, if you watch Jay take profits on YouTube, he's a cool guy. One of the first people I started watching. Yeah, that's what he said. Pips a day, man. Pips pay my bills. Pips pay my bills. 20 pips is all you needed. You would have been in literally from this candle here. Boom. So it's even more than that. It's like a 22 pip trade. You don't need more than that. You had an 8 pip stop loss, 22 pip trade, 2.28 trade. Easily could have made money. If you had a 0.10, that was $20. If you had a 1.0, that was $200, I believe. So yeah, if you had a 10.0, that was $2,000 trade just off of that. And then if you was a bit more earlier, then you would have caught this one here, which I gave out as well. The idea of what, if you used market structure, you would have seen this break of market structure here, sorry, and you would have been in here with your stop loss above this level here. Boom. And then that was a right there to this level here. So once it hit your TP1, which was the Asian high, which was a 29 pip trade, and here was a 57 pip trade. Guys and girls, you don't need more than that. So yeah, you would have either got a break even on this trade, I told you needed to be cautious because of this move here, or you would have at least hit your TP1 on this trade here, which was just down here. Boom. So you would have entered there, TP1 was here, TP2 was here, and the Asian low would have been TP3. Done. And you can see price action is obviously buying back up now. So yeah, that was a live call out on a trade right there. For that 20 pip trade. Wasn't the biggest trade in the world, but again, it's scalping. You know, scalping, you don't need a lot of pips. Any other pairs people want me to check? I can't even remember why I went back off with the GJ now. Yeah, it was for this buy. But it was actually just hilarious they're doing that. Yeah, so again, demand level was here. You can see the Asian low was formed off of that demand level from this breakout of this candle, boom. And now we're seeing a buyback up on price action, literally. Let's go to a 4-hour chart, see what it looks like. Yeah, so right now we're not probably going to see too much on this because the 4-hour level structures here. So they could be going all the way up to here on this before you see a rejection back down on GJ. They could be doing that before you see a next rejection. That's a major level of resistances around this area here, as you can clearly see. Cool. Anything else people want me to check? Or if not, I'll just leave it there. There's nothing else you want me to check. Like I say, there isn't really too much going on. Let's go to a 15-minute time frame and check some pairs quickly. Let's check all the majors. So EU, we'll go back over to EU. Yeah, so we're seeing a buy up on EU now. So if you are trading the market makers method, this is another thing. Like I said, I'll be just trying to drop as many gems as I can in these videos. You can watch it. So the market makers method, this would be called a type 1 buy, because it broke the Asian low, pulled back, came back here again, and there we go. Really, you're just looking at one move. And you look to take it. All it needs to do is break the Asian low and then buy back up going into London session. So we're looking at type 1 moves happening right now. This is what it is. And I'll go over more about that in another Zoom call. So this is what's happening so far. If it breaks above this and stays above the mid-level, it hasn't broke out of it. If it goes here and doesn't break this mid-level, then you'd be looking at a type 3 sell, which is basically the 50%. So if it doesn't break here and then pulls back down and sells, it'll be a type 3 sell. I don't tend to trade those because you're trying to anticipate those type moves, and price action just tends to do what it wants to do. And plus it can extend the move to New York. So you can get a type 1 buy, sell, you can get a type 2 buy, sell, you can get a type 3 buy, sell, and then it could be a London version of that or a New York extension. That's what I realized after trying to trade those. So it does get a bit tricky, but it is a very good way to trade basically scalps. The idea of that is so people can know, is below the Asian low, there's a stop hunt box. Every single day when the Asian session forms, there's a stop hunt box, 50 pips to the low. So the sell stop hunt box for a possible buy trade is down here. Yeah. And then it's an imaginary box if people don't know this. And then the buy one is all the way up here. Oh, sorry, the buy one, the sell one is up here, and the buy one's down below. I'll just do it for you now. Right here. So what I'm talking about is there's an imaginary box here. So imagine there's an imaginary box here. This is the sell one. And then we'll clone this. And the box is 25 pips big as well. Do that. Sorry. Okay, no, will it be that 25 pips? It'd be 25 pips this way, yeah, because 50 pips are that way. 25 pips this way. Wait a second, people. See that? Just do that. Yeah. So something like that, basically. Clone. Right here. So you can get the idea of it. People don't see, this is all the hidden stuff that is behind the charts, basically. So let's change the color. Right here. There we go. No, let's change this. There. So there is a hidden on every single Asian high or low. Yeah. There is a box that's 50 pips away from it. And there's a stop hunt box. And there's a, this is supposed to be this way. There's a stop hunt box on both sides. And what price action can do is this. So imagine they wanted to sell it. They'll stop hunt here. And then New York, they'll reverse it like that. Or they'll do it vice versa. So even if it breaks the high and low of the day, depending on how far the high and the previous day's high and low is. So look, the previous day's high and low is over here. So if they want to sell it from here, they could technically be going to the stop hunt box and then sell it. Hopefully that makes sense for people. I know it's a bit complicated. I can go over it more, you know, over time. So if we were looking at EU sell, they could be pushing up to the stop hunt box, which is here, 50 pips away from the Asian high, and then they run it back down prices where the liquidity is. So that is based on the market maker method, basically. Okay, we'll come back over to that gentleman later. So yeah, any other questions, people? I've done a bit of answering, gone through this, gone through that. See what gold is doing. Gold doesn't seem to be doing too much. There's no other questions, I'll leave it there. Right now, gold has a supply here. And gold, so you want to pay attention to what it does. So a good area to look for your supply demands is just go to the 1 hour chart and see the last big move. Look, you see there. So gold, you want to see what gold does here. If gold respects this area, it can sell back down some more to cover that liquidity wick that I told you about down here. So this is your area of supply right there. Let's go to the indices. You're not really going to see much on the indices till later. This one's already broke here. I haven't really seen a big swing. There's not enough for me to say anything, but right now you've got a demand level here. Yes, so boom, where was the breakout? This one here broke out right here. So there's a demand level here. So if US 30 is going to keep buying, yeah, you want to see it come back down to this demand level here, because this was the breakout candle here. So it could either be the whole candle here, or you could just use it from the open of the candle right there like that. Nice and small, boom. And there you go. So you're looking at this level. And if you move this over here, let's see what it looks like. You can see our price action broke it here for the buy, broke it here for the sell. Let's go over here. Respected, buy. Let's see why this level's been respected. Look, boom, broke it, sell. Resistance level, sell. You can't make this stuff up, people. You can't make this stuff up. Look, see, go over here, broke it, sell, broke it, or respected it here, bought up a little bit. See, broke it there, so so on and so on. So yeah, you're looking at this level here based on that. I think I've answered a good few things anyway for people. Again, if you've got any pairs you want me to check, please let me know. If not, we will we'll finish off this Zoom here, and if I've got time, I will come back in New York session if I have the time. I'll try and do that. See if we can catch anything. But it's still early London. I'm not seeing too much right now, but there was some moves, so people have missed some pairs, you know. Have to miss it. Let's see. Let's go check the GBPs actually. GA still buying. Okay. Let's check the London pairs. GBP CAD buying. Yeah, look at this as well. Can't make this up, people. Look at this. Boom. What do we see here? Let's go to the 15-minute time frame. That was a break of structure there. And then on a 15-minute time frame, you're just waiting for structure to break. Look here, break of structure. Boom. You'd have been in here. Stop loss below this candle here. They tried to take you out, but you know this is a demand, so you could have a stop loss below this candle or below this candle, which is the daily low. You can see already the previous day's low, and now you'll be in this trade for a buy. GBP New Zealand. Again, let's go to the 1 hour and see if you could have caught that buy. Very simple. So I'm just playing with a 1 hour strategy, as you can see, and this is how I'm trying to catch this. So GBP New Zealand, where was the break of structure? So let's start from here. Boom, boom, boom. So we had a break of structure here. Boom. So there was a level here. Okay, where's the next break of structure? Here. Boom. So you had a level here. Right over here. A level here. Look at that. Boom, boom. So sometimes you're going to get this impulsive move. This is annoying. When you see this happen on Neo, this is annoying because there'll be times where they don't pull back the market. And that's what happened in February. This is why whoever's in the VIP Zooms, group, yeah, even for the signals, this is why we saw some good trades in February, but we didn't see a whole bunch of great trades. So the pip count's lower because what happened is a lot of the pairs, especially the USD pairs, EU, AU, etc., they weren't pulling back to the supply or demand areas to give us our retest for our trades. They were just going off. They're basically just doing this, but over the period of a week or two. Now, because I'm on a 1 hour chart, you're seeing it happen quickly. But when you start going up to the daily, weekly, this little gap here, this impulsive gap can be huge. So it technically was a little pullback here. So, for those vigilant traders, they would have got in here, but you can see it still didn't really go to it. So some of them would have got that. So we're seeing this, but look there, boom, boom, boom. That's that one. And then where was the next break of structure? It was this candle here. Clone this. Yeah, but this is a small one, tiny one. So we didn't see anything there. Where was the next break of structure after that? Pull back right here. This candle broke here. But this candle broke back down, so that wouldn't have been it. Let's see. So you had here break of structure, and then you had your next one here. So now this one didn't have a wick. It was technically this area here. This one didn't have a wick. So they used this whole candle as a break of structure candle right here. Wow, this buy looks like it's impulsive. So when you don't see a wick, I would say use the whole candle. If you see a wick, then use the candle. Use that as your supply demand. But you can see here, there was no wick on this candle. So this whole candle at any point could be obviously a place where you could look for a buy trade. And if we go down to a lower time frame, right here. So now they push it. So it's probably even better actually to go down to a lower time frame. My bad. So you go down. So on the 30-minute, you still don't see a wick. Go down to the 15-minute. Boom. Still can't really see a wick. Still can't. So go down to the 5 minutes, see what you see. Okay, this is better. So now this is what you do. So remember, that whole candle was a massive impulsive candle. So this is like a more advanced version of trading. You can see I'm even just showing you this straight away. On the 5 minute, we can see this candle here because it's got no body wick. There you go. And that's it. So remember, we've seen, so I can break this down. We've seen a massive 1 hour impulsive candle, no wick. So we don't know where we're going to be able to catch the retest for this breakout. on this trade. Okay, now we go down to a 5-minute time frame. We've gone down all of our time frames. Sorry. So we go down to a 30-minute. We still can't see nothing. We go down to a 15-minute. We still can't see nothing. We go down to a 10-minute, even you still can't really see nothing. Yeah. All right, cool. Then you go down to a 5-minute time frame, and now you've got this one candle here, and you say, okay, if price action at least pulls back to here, I'll be looking for my buy. And there you go. So you've had your breakout here. You've seen a rejection. You've even seen this bullish candle. You've got in here. Now, this is not something you're going to be able to do straight away. You're going to have to take your time to do this. But there you go. And that was a, wow, that was a bit, yeah, that was a 8 pip stop loss. Okay, let's put this, your stop loss with him here. So yeah, it was a 3R trade, just like that. And it was about 36 pip trade. Simple London trade. So you need to be, if you're looking to scalp, you're trying to find trades more like this. And if you see this as well, where's this, the previous day's low or high? Let's go 4 hour. No, 4 hour, 1 hour, sorry. Previous day's high. Okay, yeah. So this was on the previous day's low, I believe. No, that's the previous week's high. So yeah, this is the previous day's high here. It should be. Go to the daily quickly. Let's just see. Yeah, there you go. So this is exactly what Ross was talking about. So you see there, look, previous day's high, rejection of the previous day's high, continuation of a buy. So you see, so if you want to be more safe, only trade ones that are like that. So you can see previous day's highs or low, you can do that, or you can trade them like I've said, wait for them to get to those areas, then do your whole analysis of your supply demand, your Fibonacci, however you want to do it, and then look for your rejection. I'm trying to use supply demand to find these areas because, again, I'm only trying to catch, what I'm trying to do with my 1 hour strategy is only catch like 50 pips. So anything close enough to 50 pips, I'm good. I don't care. That's it. Just trying to catch that. If it can give me that quick little move, I'll get that. And that's what I'm trying to do for a scalping strategy at the moment. I'm trying to see if Neo will be able to help me with that so I can teach people how to use that when Neo's out there. So yeah, like I've said, kind of really gone through as much as I can. I'll be back again in New York session, hopefully, and then we'll see what happens, see if we can catch some New York trades. With that, guys and girls, I'm going to love you and leave you. And thank you very much for your time. And this will be uploaded onto YouTube anyway, so people can watch it. Have a good one, guys and girls, and I'll see you later.